So,
Oh, hello there. My name is Victor Salas. This is Accounting 301.
for Chapter 3. And so, question number 1, what is a journal entry?
A journal entry is a recording of a transaction into the general ledger. It is the first step of the accounting cycle. A journal entry needs a date, amount that is debited and credited, and a description of the transaction, as well as a reference number.
What is an account?
An account is a record in an accounting system that tracks the financial activities of a specific asset, liability, equity, revenue, or expense.
And what is a ledger?
A ledger is a book containing a complete record of transactions recorded in each account.
What is posting?
Goddamn. The ledger is used to prepare the financial statements. Posting is a process of transferring information from the journal to the ledger accounts.
What is trial balance?
The trial balance is a listing of account balances in two columns, one labeled debit and one labeled credit, and is not considered a financial statement. However, it is a trial run to provide the balances of the accounts.
What are adjusting entries?
Give me 1 second. Adjusting entries are a journal entry in a company's general ledger that occurs at the end of an accounting period to record any unrecognized income or expenses for the period.
And lastly, for question 1, what are closing entries?
Closing entries, a journal entry made at the end of the accounting period that transfers the temporary accounts on the income statement to the permanent accounts of the balance sheet.
Excellent. Question number 2, what is the basic accounting equation?
Good question. The basic accounting equation is assets equal liabilities plus owner's equity. Under owner's equity, there's capital, dividends, revenue, and expenses.
All right. And question number 3, describe the 9-step accounting cycle.
Step 1 is to analyze source documents and record business transactions in a journal. Step 2 is to post journal entries to the accounts in the ledger. Step 3 is to prepare a trial balance. Step 4 is to gather adjustment data and record the adjusting entries on a worksheet. Step 5 is to complete the worksheet. Step 6 is to journalize and post the adjusting entries from the data on the worksheet. Step 7 is to prepare financial statements from the data on the worksheet. Step 8 is to journalize and post the closing entries. Step 9 is to prepare and post closing trial balance.
And finally, question 4, what's the difference between deferrals and accruals?
The difference between deferrals and accruals in accrual accounting, an expense or revenue is reported in the period it is earned or the expense occurred. In deferred accounting, you delay to recognize the revenues or expenses. For example, in deferred revenue, the revenue is reported before it is earned.
Any closing statements?
Thank you.